Well, hello everyone. The question today is motion the same as change? The House Republicans proposed extending the debt ceiling by 6 weeks, which raised hope about a possible solution, albeit only a temporary one. Is it a temporary one or a solution? And one that didn't resolve the government shutdown. Although in the event no agreement was reached, stocks soared on optimism that one would, and the VIX index collapsed, while in the T-bill market, yields plunged, although I'd like to point out they rose again later in the day, and they're now above yesterday morning's levels in early European trading. Speaking of T-bills, note that the 1-month T-bill yields are still above 1-month LIBOR, indicating that the market thinks that there's more chance of the government defaulting than your bank defaulting over the next month. So clearly we're not out of the woods yet, but they seem to be the only market that's really concerned. The relief rally in FX wasn't in the dollar. The U.S. currency actually fell against most other currencies. The ones that gained the most were the high beta ones, the Australian dollar and the Canadian dollar. But sterling also continued to claw back some of its losses from Wednesday's disappointing industrial production figures. Stock yen Noki continued to weaken, but the main loser on the day was the yen, as dollar yen, as usual, moved higher in tandem with the topics. There's a 65% correlation on a weekly basis over the last year, so that's pretty much a done deal. The Swiss franc, on the other hand, the other safe haven currency, was slightly higher. Now, I'm an economist, not a political scientist, so frankly, my view on the U.S. political situation probably isn't worth much more than your bartenders. But as far as I can tell, it's going to be hard to find a solution that satisfies the requirements of both the House Republicans and the Senate Democrats without employing the square root of -1 or other imaginary numbers. So personally, I expect the drama to continue down to the wire next Thursday, at least, until a crisis in the broader financial markets, not just the T-bills, but the stock market, focuses everybody's minds. In that case, the strength in the commodity currencies would reverse as investors' steady faith in the U.S. political system starts to waver. This morning in Europe, the final figures for September German and Italian's CPI will be released. They're not particularly market affecting. In the U.S., we've got the University of Michigan Preliminary Consumer Sentiment Index for October. It's expected to fall to 75.9 from 77.5. Given what's going on in Washington, a fall in consumer sentiment wouldn't surprise anyone. Finally, there's going to be a large number of central bankers speaking at the Institute of International Finance annual meeting today and tomorrow. For more information, including technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.